is up, guys? Welcome back to another episode of Andrew Capital. I am your host, Andrew Capital, and welcome to my channel. I want to thank you guys for 600 subscribers. Before I forget, go ahead and hit that like button. Please subscribe and turn on notifications. It helps the algorithm point you guys to more of my videos when I post them and to more content that you might like. It actually helps you as well. So let's get right into it. I appreciate you guys so much for watching along and supporting the channel. Let's continue to keep killing it. So today here we have Euro USD on the 15-minute chart. Now, the 15-minute chart is kind of like our bread and butter. It's kind of our main, I like to use it as like my main time frame. I will use the weekly, daily, and the 1 hour for higher time frame top-down analysis. But typically I like the 15-minute for areas of liquidity, equal highs. It can even be used for fair value gaps for entry. So I will do mainly 15, 5, all the way down, sometimes 3 minute, 2 minute, 1 minute. So here we have our Euro USD on the 21st December 2022. The gray box here is our Asian range. Then we have in the light blue is London session, and then in the light green here we have New York session. So I like to have my sessions color coordinated. As you can see clearly, in Asian range you have that kind of consolidation where price is accumulating, and then you have your expansions. So if you look here on the Asian range, we have our Asian high here just before London. Okay. Actually, let me use arrows here. So we have our Asian high. Okay. Switch this to black. And we have our Asian low. Okay. Now, if you're going to trade the London kill zone, what you want to see is the Asian high or the Asia low being taken. So as you see here, Asia highs were taken, right? Now we're going to, once the highs are taken, you're going to wait for displacement or a market structure shift, right? So if we drop down to the 5 minute here, you can see we have a market structure shift here, and these lows were taken as well, but there was no displacement created here, and there was a slight displacement created here and here. So what you could do is we can drop down and see to the 2 minute. Okay, so we have no displacement here on the 2 minute. Go down to the 1 minute. So let's see, no displacement here. So you see price was very efficient here on the 1 minute. So although we had this break here, there was no fair value gaps being created. Now on this swing low, when this was broken, you have one gap here, another in here, and one in here, another gap in there and in there. So what I would do here is, in this case, this is our market structure shift here. Right? And then I take my GAN box and run from this high to this low. Now we want to see price come up 50%, right? Which would be our halfway point. Now, if we look at 50%, is there a gap here? Yes, at 50%. So what you could do is set your short, let's see, your short position here. And all I like to do is put my stops at the top of the range, because exactly like what happened here, you never know. Price can come back all the way up here and then drop down. So that being said, what we do here is I would then target these Asian lows, because we have lots of sell side liquidity resting down here. So you could target small fair value gap here, but I would target pretty much these equal lows, or the Asian lows. You also have some liquidity built up in this area. So look here, that would have been about 20 pips or so. You would not have gotten stopped up there, right? And then eventually into New York session, we have your TP being hit there before it reverses. Now you could wait, and there's another fair value gap, okay, because we would have been filled over here on this, right? Now what we could have did is waited for this fair value gap, right? And this would be the most optimal one for it to come back to return to. So then this would be our entry with stops just above here. Not bad, 6 pip. And same thing, would have had a little bit more, couple, what is that, 5 more pips. Now let's see here, we have a nice displacement again here. So if you didn't get in here, you have a confirmation displacement. Let me get rid of this here. Small market structure shift here on the 1 minute creates a nice displacement. Now this is a really good displacement here, right? So then we're gonna mark this box off, right? That's your displacement. And then we would put take our shorts here and put our stops above here and target down here. Okay, so those are 3 different scenarios you could have taken. Now if you look to the left, this also lines up and taps into the same area here. So this is just, areas of demand. Now go back to our 15-minute, reset the chart. Now if we look into, now why were we looking for shorts? Because liquidity came and took out the Asian highs. So that being said, okay, this was the accumulation, this was the manipulation up to take out sellers from back here in this area, and then we have the move down to take out the lows, to take out buyers from the manipulation. Okay, same thing happens again in New York, right? So now we have London highs, right? And we have London lows coming into New York, right? And then we also have relatively equal lows here on the 15-minute in this area. We drag that out, right? So we have a small gap here. It filled it a bit, but there's still you have relatively equal lows here, so there's some liquidity down there still, resting it all under here. So if we look on the 15-minute, we have price being swept. So this is buy side liquidity up here. Here, and then we have sell side liquidity down here. Okay. Now on the 15-minute, you see we have price or liquidity being taken here, and then we have these lows being broken here. This swing low here. Now in this whole move down that breaks these lows, we have nice displacement here on the 15-minute in this box here, right? So if you were going to use the 15-minute alone, we could have took shorts off of this level here, put our stops up here, and target down here. Now that's not really the best risk to reward. So if we look and we are patient enough, we have another displacement just above there up here on this box, right? And if we take our GAN box again and take it from this swing high to this swing low, right? Anything above 50%, which would be, well, let's do the break of market structure. So it would be here, because if we were playing it back in real time. So this would actually be the better fair value gap anyways, because it's above 50% into this here. So then you would place your shorts here. And stops above this candle and take profit at the low, right? Which is a nice 2.2 risk to reward. And now if we drop down, we can kind of see maybe where we could have got it in better entry. So if we look here, we could have kind of honed in on our gap specifically here. Even if you got in on this gap, it's still pretty good there, right? There's still 29 pips there. So this on the 5-minute here, because it is the first premium array, PD array, above 50% of this whole swing high, swing low, that takes out this swing low, right? Now, also on the using the 15-minute, you could also use your optimal trade entry technique. Clear this out. Now, if we're just using the 15-minute on in the New York session, you take your Fibonacci retracement, right? And let's hit replay mode. Replay mode. So here, right? Take our Fibonacci, run it from the high to the low, and play price forward. Right? Our optimal trade entries are going to be 618 or about 80% to take shorts to 27, which would be our first target. So if we move price forward, price comes up, taps that 618 area, right? Take the shorts off of this level, 618, stops at here or above the swing high. Target TP1 would be 0, and then TP2 would be 27. as you can see, right? Oh, totally correct. So that's one way to use the optimal trade entry, OTE, from the swing high to swing low, right? Even if you were to use that swing low, you still get close to 80% and still have that 618 entry. I use that, or you can use body to body, right? Body to body gives you this precise entry here, a little bit better of a risk to reward here. So I recommend body to body, but you can use the wicks. It's all around preference, but so that would be our OTE entry point. All right, guys, if you have any other questions, feel free to give a comment below on anything else that you would like to me to go over or like topics on. And thank you guys for watching. Happy holidays and happy new year. Let's get ready to crush 2023. Hit that like button, subscribe. Thank you guys for watching.